This week, we're going to talk about this slide in the cattle markets, and we'll take a look at monthly trade data. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us as always is University of Missouri's livestock economist, Scott Brown. Good afternoon, Scott.
Happy Friday, Meghan.
Happy Friday. Maybe not so happy Friday if we're taking a look at cattle markets. We'll talk about that in a little bit. We'll take a look at monthly trade data, which I thought was pretty interesting this month, and we'll talk about some slaughter numbers. But let's start first with kind of a recap of what happened this week in the markets.
Yeah, it's been another not so great week when we look at these livestock markets. On the cattle side, live-fed cattle were down $3 this week. Those feeder cattle markets, cash feeder cattle markets, were down hard, anywhere from $9 to $14 this week. We're also down on the futures side. The October live cattle futures contract was down 85 cents, and the September feeder contract was down 6.35. That puts that feeder cattle contract down almost $18 in the last 2 weeks, Meghan. And that's despite what's been almost an 18-cent decline in corn prices over that same period as well. On the beef side, choice box beef prices were up 40 cents this week, still trying to hang out in that 315 range. That was despite what was some lower loin prices in that choice box beef price. On hogs, cash barrels and gilts were down 215 on the week, and the October lean hog futures contract was also down to 60. We also lost on the pork cutout value this week. It was down $5. Really weakness across the board, but hams and bellies certainly didn't help us this week.
Did you take a look at the markets in general? We touched a little bit on this last week as well. Fundamentally, this is not necessarily what should be happening. What are you watching most of all right now into what's going on with these, not just cattle futures, but those fed cattle and cash cattle prices as well?
Yeah, so I think we have to continue to watch what's happening on the demand side of the equation here in terms of the weakness that we're seeing. I keep saying I don't think the supply fundamentals have really changed in cattle or hogs the last few weeks. So it's not that side of the equation. As the general economy kind of took a step back, it's come back here as we've gone through this week, at least a little bit, some of the losses that we saw early on. But watching that demand side, to me, that's the critical piece here as we kind of get into the last part of 2024.
All right, so let's take a look at slaughter numbers. As you take a look at both cattle and hog slaughter, where are we at this week?
Yeah, so we certainly continue to see lower cattle slaughter runs. USDA tells us for the week ending August 13th, the run of 591,000 head of cattle this week. That's 2,000 less than we did last week, which was also a fairly low level, but 12,000 head less than what we did a year ago. On the hog side, a run of 2.372 million head of hogs this week. That's 83,000 head less than we did last week, but that's 4,000 head more than we did a year ago at this time.
I think it's interesting on the hog side of things. We've seen smaller runs this week. The other thing that we're seeing right now, I monitor for our markets hog weights. And while we're still running well above where we were a year ago, we're really starting to pull back and have seen significant declines over these summer months. Does that potentially help the pork market eventually if we're seeing maybe lighter weights, less runs, and less slaughter?
Absolutely. I think that can be important to the picture. I keep saying the potentially most positive here is we keep seeing cheaper feed costs. We'll see what USDA gives us next week in the WASDE report, but I keep saying that may be the other piece of the puzzle that kind of keeps us in more positive territory from a profitability standpoint than otherwise would be the case. To your point about hogs, we could talk about this in cattle as well. We certainly don't have the cut in beef production that we would have thought about late in 2023 happening. As we talk about heavy weights, that has certainly offset some of that, and as well as additional imports of beef. So it's interesting how we find ways to be more flexible in terms of supplies when our own domestic sector is undergoing changes like we see on the beef side, especially.
And especially, I'm assuming too, with these lower feed costs, right? That's not something that may go away anytime soon in terms of these higher weights and being able to feed a little bit longer.
For sure. I mean, right now it looks like to me we're going to have fairly good crops, especially on the corn side. We're probably not quite there yet on soybeans, but it looks awful good in many parts, despite some parts of the growing season that seemed awful dry early on. So I keep saying $4 corn looks a lot better on the way down than it did on the way up. And so we may see that's the winning combination here, although this idea of diversification all comes with you need to be efficient at all of the enterprises that you want to run. So if you're going to be in the hog and corn business, you better be a good corn producer and a good hog producer.
It's all about balance, right, Scott Brown?
That's right. That's right.
All right. If we're looking at those year-to-date cattle and hog slaughter numbers, how are those stacking up compared to where we were a year ago?
Yeah, if we look, cattle slaughter now is 4.3% trailing a year ago, while hog slaughter is up 1.2% relative to a year ago.
Big report out this week, monthly trade data. As we take a look, we'll start with beef exports for June. What stands out for you when you look at this in terms of export volume?
When you have high domestic prices, it makes it hard to export beef, is my big picture for you today. However, when you look at the data that we got back out of the June 24 monthly trade data, beef exports, so 263.5 million pounds went out the door in June of this year. That was down 2.4% relative to June of 2023. So we've slowly, I think, been trying to cut the losses that we've been seeing. You know, for me, the other interesting part is just looking at the mix here for a minute. So China, 65 million pounds, Japan, 58 million pounds, South Korea, 52, Mexico, 26, everybody else, 62. It just, the balance that we seem to see. So China was down, South Korea was down. We saw modest gains to Japan and Mexico. We're down 71 million pounds year to date on the beef side. I think we'll continue to see this struggle of getting beef exports up, especially as beef prices stay higher for us.
On the pork side of things, well, actually, before we move to pork, I think I can't let you out of this conversation without talking about imports, because that's part of this conversation as well.
For sure, it is. So it's amazing that we've imported 2.21 billion pounds of beef into the United States thus far in 2024. That will continue to grow as we go through the remaining months of this year. For June of this year, 341.6 million pounds, up 15.7% relative to June of 23. And when you look at year to date, we're up just a measly 19% in terms of beef imports. Now, I joked briefly there, we need still lean ground beef. I think when you look at slaughter weights here, we have plenty of fat. Having some lean beef to go with it certainly makes sense, despite some will cringe at me saying that out loud, but I think there is some balance to be had there.
Especially when the lean trim in the US is bringing a premium right now, correct? And that is discounted.
That is correct. Think about where ground beef prices might be had we not seen. Well, all right, so year to date, we're up 350 million pounds in terms of beef imports. Just think about what that means to the kind of bottom line of per capita consumption in this country by what we've done on the import side.
All right, now let's talk pork exports for June. Really kind of a pullback there as well.
Yeah, for sure, we saw that 524.1 million pounds of pork left the United States June of this year, down almost 60 million pounds from what we did June of 2023. So 10.2% lower pork exports June over June. Now, when you start looking at the individuals, this is interesting as well. So I want to go back. So we talked about beef by destination. So let's talk pork by destination. A little different story here. 188 million pounds of pork to Mexico, 89 to Japan, 54 to South Korea, 34 to China. So kind of a switch here in terms of how important Mexico's been. Just to highlight, 188 to Mexico versus 34 to China gives a little perspective on who's important. Now, Mexico, Japan, China, even that everybody else, and we've talked a lot about this, all other destinations, well, they were down 7.7% June of this year relative to 2023. So a little different story than we've been telling. Year to date, though, we're still up 3.2%. We've exported another 111 million pounds out of the United States, with really Mexico and South Korea taking the lion's share of that growth.
That's really all we have. And I guess maybe before we preview next week's reports, how much when you look at a slowdown on the pork side of things, is it not cause for alarm, but are you monitoring to see where this goes the rest of the year? And how much are you watching what happens in terms of pricing here and how that all kind of plays into that picture?
Yeah, so I do think it's important to talk about prices here. I go back to the pork cutout value when we talked about where prices were. Realize we're $11 below where we were a year ago in terms of the pork cutout value. Now we lost 5 this week, so let's keep it in a little bit in perspective. But if we keep running pork cutout values below year ago levels, that may be enough to give us a little more oomph in the latter stages of this year for pork exports. But we need, when we realize hog slaughter has been up 1.2% year to date, we need more demand. Export demand can be part of that picture. So I think it is an important piece here in the latter part of 2024.
Supply and demand numbers are out next week along with consumer sentiment. I think you kind of previewed what we're going to watch next week in that supply and demand numbers. But overall, what are you looking for from USDA?
Yeah, so we get our kind of first look from USDA at yields from a survey standpoint. They've been giving us trend yields thus far in their estimates for harvest this fall. I guess I expect them to increase corn yields in the report that we get on Monday. And potentially, I suppose, continue to talk about maybe some drifting lower of prices for the 24-25 year. But to me, that's the big piece here for the WASDE we get here in August, is the better look at what's production look like in the bin this fall, because we're getting a lot closer to having at least corn crop figured out at this point, and maybe soybeans aren't that far behind as well.
It will be an interesting Friday for us next week.
That's for sure, Megan.
Scott, it's always great to see you.
Likewise, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments. And for a daily rundown of what's going on in the markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.